what goes up must come down, and what goes down must go up. Eventually, some indicators starting to point to a possible turning point in the markets. Let's discuss. My name is Dan Slim, and welcome to another episode of Monday Market Outlook. As third quarter earnings season gets underway in the US, typically led by banks, the spotlight quickly turned to regional lenders after Zion's Bank Corporation and Western Alliance disclosed surprise loan losses tied to suspected fraud. What began as routine earnings updates has instead reignited concerns about credit quality and risk management across smaller US banks. Remember, the SBB collapse, which happened back in 2023, apparently most of the solutions applied before were rust, and investors are starting to worry that these could be early signs of deeper stress in the financial markets. This resulted into a steep decline in the KRE ETF, dropping 8.7% last week. So confidence in the regional banking sector remains fragile even more than a year after the 2023 banking crisis. Now, the regional banking surprise, coupled with renewed US-China trade tensions, shifted Wall Street's tone from optimism to anxiety as bearish sentiment pivoted to 46.1%, up from 35.6% last week. While the S&P managed to quickly rebound from last Friday's initial sell-off, the index struggled to regain momentum, no, as it hovers near key support levels around 6,600, and it has struggled to overcome the dynamic 20-day exponential moving average, which has now become a dynamic resistance. So investors are now worried that these headwinds could slow economic growth and delay rate cuts, prompting a move into defensive sectors and safe haven assets. Now, speaking of safe haven assets, gold is still the talk of the town, even in the local markets, with analysts forecasting it to reach $5,000 per ounce by 2026. Gold has gone parabolic, climbing for 9 consecutive weeks without any meaningful pullback, a rare feat in its trading history. And as we enter the 10th week, it's worth noting that gold, has never logged 10 straight weeks of advances. Historically, this 9-week streak has only occurred 5 times since 1970, each marking a key inflection point where gold typically corrected afterwards. In fact, based on historical data, gold's performance after such streaks tends to show average declines of around 7 to 13% within 1 to 2 months. No? So on top of that, gold's strength has been relentless. Its RSI has stayed above 65 for 33 straight days, marking this as only the 13th time gold has ever stayed above 65 for at least 15 consecutive days. So this shows how powerful the current rally is, no? And in the past, similar overbought periods usually leads to short-term pullbacks, but gold, no, still tended to move higher over the next several months. So if this will remain the case, we could enter into a period of consolidation in the next 2 months maybe, or profit taking before its next move higher. No? Meanwhile, trading activity on gold ETF also shows that investors are heavily betting on more upside, with call auctions hitting record levels. No? So this kind of optimism often appears near short-term peaks, suggesting that gold may be due for a pause or minor corrections. And still, with political risk, policy uncertainty, and rate cut expectations all supporting the demand, no, overall uptrend for gold still remains intact. So last Friday, gold sold off, no, falling 1.7% from its recent highs. So the question is, could this be the start of its consolidation phase, or could Trump's tantrums help gold break its 9-week streak resistance. Meanwhile, Bitcoin plunged to its lowest level since July, dropping over 5% to around 103,000, again because of renewed US-China trade tensions and also because of large fund outflows fueled by wave of crypto liquidations. So same with gold, the asset is highly leveraged. So the sell-off triggered around 1.18 billion in leverage liquidations within 24 hours, with long traders bearing the brunt of the 917 million in losses. So let's look at the charts. Maybe with Bitcoin retreating, can the PSEI finally overcome the 6,100 level here? So you see here, the 6,100 level has been a pivotal point for the PSEI for the whole year. So we are now back at 6,100 and we have had trouble trying to break out of that level since what? Since the start of October. But recent price movement shows a squeeze by investors to the upside, right? So could could we see a possible breakout for the PSEI given the Bitcoin's retreat and gold's possible correction? Or maybe the attention could shift back to stocks. No? So let's look at some index names here. Ayala Corp. We've seen Ayala Corp rally here. Rally, but then sell off, rally, sell off, rally, sell off, rally, sell off. Again, we are in the same situation. We have a rally here and we have a potential sell-off here. The levels to watch out for 450 and 440. So let's see what happens there. SM looking much better, holding support at 729.50. This could be the bottom for ASM. So it could consolidate. Let's look for some indicators of reversal. It could rally back to 764 and break out of that. So let's see if it manages to do that. SM's second index heavyweight could push the index past 6,100. Now, DMC's recent sell-off may be brought about by the possibility of special dividends not being declared this year. They should have declared dividends already. Well, last year, they declared dividends at the same time in October, but their silence this year has probably spooked investors. LTG having trouble bouncing off of the support level here. Actually, it has breached the 20-day EMA support level. It is moving along this narrow band. The 20-day EMA has now become resistance. We have now the support here at 1480. It is just bouncing off of those levels. So this could be a double top. If it breaks down here, could be a reversal or at least a temporary reversal of trend. The next level to watch out for is around 14 or 1380. Moving on to the property stocks, Ayala Land, one of the most sold off stocks, especially by foreign investors. Best case scenario consolidates here. It needs to consolidate because of this very large sell off here. Hopefully it consolidates here and bounce back. But if it breaks this level, 2150 should be the next level to watch out for. Not out of the woods yet for Ayala Land. S&P is so far looking better than Ayala Land, holding along the 2270 level. It's basically in the middle of nowhere. But mega wide, probably the single source of light in the property sector ever since the CREC acquisition through the block sale, could be a good turnaround play. Let's see what happens for mega wide in the next few weeks. Now, among the REITs, A-REIT and M-REIT probably are two of the REITs that shows the most signs of recovery. M-REIT recovering from this double bottom here, breakout, retest, bounce off of that retest. Good price action from M-REIT, a good chance to buy. A-REIT also recovering from this sell-off, but RCR, C-REIT not in the same situation. We need to see more signs of recovery for these three REITs. Meanwhile, for the banks here, let's start with BDO. BDO struggling with the converging resistance here. We actually have a trend line resistance here, which converges with the 50-day EMA. Could be bullish If it overcomes this resistance here, it will become a strong support if it does so. So BPI and Metrobank needs to overcome their respective resistance level. BPI needs to overcome 110. Metrobank needs to overcome 70 for a more bullish outlook for these banks. So meanwhile, gold has retreated last Friday, but the price action last week was not mirrored by the companies Apex, Philex Mining, OGP, and LC. So price action for these companies may already be getting ahead of fundamentals as investors started to take profits on these companies. No? So same situation with Semirara. The lack of news on the special dividends may be triggering a sell-off on SCC. So next we have ICT, a hold on the stock, no signs of reversal yet. Very bullish. ICT has now become the top index heavyweight because of the sell-off on SM and the rally in ICT. Looking at the consumer stocks, pure gold, the market may just need to digest its gains. No, so from April of this year, it has uh, moved up like 82%. So the market needs time to digest these gains. It might retreat back to 38. Best if it retreats to 35.60 or even 33.75 for a chance to pick up pure gold again. No? Let's see what happens there. We have Manila Water. So Manila Water forming what looks like an inverse head and shoulder, breaking down from that formation could be a sign of a trend reversal for Manila Water, most possibly affected by the Maynilad IPO. So the target for Manila Water here would be around 30.65, which coincides with this support level. At this level, Manila Water would be giving off the same dividend yield, 6%. So let's watch out for 30.65 in the next few days. That's a possible level for Manila Water. Now, meanwhile, the telcos, right, have sold off continuously with the absence of the release of the Konektadong Pinoy IRR. So from 6.1 yield, Globe is now at 6.9. PLDT's yield from 7.97 is now at 8.68. So despite the high yields, investors are still selling off of these stocks. So for this week, let's see if this could be a turning point for the markets. The thing to really watch out for is gold. Is gold going into a period of consolidation as history suggests? Now, so we'll see what happens there, right? So that's it for this week. I do apologize for the setting and the background noise. I'm currently traveling, but as usual, we will continue to bring you our market updates weekly. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.